good to have the retail investor back. I'm not one of these people that's moaning at where'd they go and now they're here and everybody's unhappy all the time. It's great that people are re-participating. Do you worry, though, that there might be a younger generation of investors who have not known necessarily a difficult equity market over the last year or two?
Well, obviously, they experienced a difficult equity market in the first quarter of this year. But if the performance of the sectors that did the best in November, any indication, if that's really driven by retail investors, they went in for the big value sectors, financial and energy. And so it's not clear exactly where they stand, but technology, which a lot of them were driven into, still did okay in November. So far, it's not 2000 for sure, as far as buying stocks that have nothing behind them, and it's good to have more participation in the marketplace.
Yeah, I probably should have phrased it better. Obviously, what happened with March with an equity collapse, but then an incredible resuscitating rally. And I bring it up, Chuck, because I guarantee you, if we were to go out and ask, a number of 25 and 28-year-old investors, they would probably tell us that they believe the Fed and or the Treasury has stock investors' backs. That in 2008 and in March of this year, that if we have big collapses, we're going to see fiscal and monetary relief. In other words, markets are protected. If people said that to you, how would you respond?
Well, it's true until it's not true. Fortunately, I have a bunch of 25 to 28-year-old people working for me, so we talk about these things. And they are momentum players for the most part. And you were just talking about Bitcoin. We've had the first Bitcoin conversations for a while in our organization. But at the end of the day, especially for them, they should be thinking long term. And long term, they should be in stocks, but they got to be in a portfolio that they're going to willing to live through when there's the next 20 to 30% downturn. And that's why the diversification such as 60-40 has worked, is time tested and have worked well over the years.
Okay, so let's say some of your smart employees sold off a little of their Bitcoin, not a lot, but they sold off enough, they banked some profits, that if you said, hey, start thinking about the next 40 years, and by the way, Bitcoin may be there for the next 40 years, where would you advise them is some value? Maybe, I know it's boring, perhaps to them, Chuck, but where should they put some of that value right now?
Well, again, they should have diversified portfolios. I want to make sure that you understand that they haven't bought Bitcoin, but that's where the discussions go when you have it at this high. But one of the things that we're really have started going into are some of the real deep cyclical areas that have actually done well this year. Materials over the last 6 months is one of the best sectors, and we have started positions in there. Commodities, which hardly ever gets talked about anymore on television, is doing very well since the March lows, and so there are places to diversify. And you don't have to stay in technology or go into the financials and energy that have been real stinkers this year.
Shepard Smith here. Thanks for watching CNBC on YouTube.